In this real estate tip of the week video, I wanted to cover the topic of FIRPTA tax. So FIRPTA stands for Foreign Investment in Real Property Tax Act. This is a 15% tax that must be paid to the federal government if the seller is a non-US citizen when they sell real property owned in the United States. The issue is that even though this is a tax based on the fact of whether or not the seller is a US citizen, the onus is put on the buyer to put that 15% aside and pay it to the federal government. So that's why as a buyer, it is very important that you receive a copy of the seller property disclosure statement, another document that is required to be given to the buyer from the seller, as it asks the seller a question in there as to whether or not they are a US citizen. Upon reviewing that document, if the question is answered, the seller is not a US citizen, then the buyer is required to put that 15% aside and then pay it to the federal government upon closing escrow. If you do not get a copy of that seller property disclosure statement, then you as the buyer or your buyer agent needs to contact the listing agent and ask them if the seller is a US citizen. If they are not a US citizen, then again, the buyer needs to set that 50% tax aside to be paid to the federal government upon closing escrow. If that money is not set aside and you close escrow, the federal government is going to come after you as the buyer for that 50% tax.